Hello again. This is Robin with Vibrant Future, and I'm a capital advisor here in Portland. And welcome to our second video of this Business Loans Basics video series. And in this video, we're going to be talking a little bit about good loans versus bad loans. There are loans that are good for your business, and there are bad loans that are not so good for your business. Just as a quick reminder, the first video talks about the basics of loans, different types of lenders and different types of loans, and some key loan concepts. This video will cover good loans and bad loans. Video number 3 will talk about what it takes to get a loan and a timeline that you should expect for getting a loan. And then the last video will talk about some common fears and misconceptions that business owners have about business loans. And just a reminder that this video, while it is appropriate for all businesses operating in the U.S., is really being intended for businesses located in Portland, Oregon, as we may be using examples or referencing resources and organizations that are specific to the Portland area. And as always, a big shout out to Prosper Portland, who is supporting us in the development of these videos. So let's talk about when it makes sense to get a loan, when a loan is good for your business. It is good when you have an opportunity to grow capacity and thus sales. So maybe it's bigger space or better space that fits with your business. Maybe it's equipment so that you can produce more goods, or you can produce the same amount of goods but cheaper. I know a lot of young businesses, they start out, because they don't have the cash, they may rent a piece of equipment to do their work. But as their business grows and becomes more steady, they have the confidence to say, hey, instead of paying $100 every time I want to use this equipment, I'm just going to buy it, and it's going to be cheaper, and I can use it whenever I want. I'm not restricted by, when this piece of equipment might be available or not. So, getting equipment, it makes good sense. Marketing and sales. When you want to grow your business, right? You have an opportunity to grow your business. You need to invest in marketing and sales. Those are, good reasons to get a loan. Or when you want to grow your business and you need just to hire more staff, and you need to cover their costs before the addition of that additional staff generates sufficient revenue to cover them. So you kind of need to prime the pump, so to say. Another, good reason for getting a loan is to free up cash flow, to support more capacity. In the last video, I gave an example where a construction firm needed some capital to float, cover their business, because they incurred labor and material costs up front, but it could be 60 to 90 days before they get paid for their services, and so they need to float that money. You might have sufficient capital to cover that for a small number of contracts, but as your business volume grows, you're going to need more money, and maybe you don't have that money, and that money, lack of working capital is preventing you from growing your business and thus sales. Makes sense. I gave some examples earlier, but when you have an opportunity to reduce costs, as a young business, sometimes you incur higher costs because you're not confident that that new product or that new offering is going to be successful. So you kind of reduce the risk, but pay a higher per unit fee, so to say, for that. So there's an opportunity to reduce costs and make investments to reduce costs. And I think the final way is when it makes sense is when there's an opportunity to build wealth. And a great example of that is real estate. You start off a business, chances are you're renting the facility or a store that from a landlord. It's affordable. It's not a huge commitment. You don't know exactly, when your business is young, you may not know exactly what direction you're going in. But once it's established, you kind of have a much better sense of what the business, can do, what the risks are involved. And it may make sense for you, instead of paying a lease and making those rental payments, for you to buy a property. And therefore, every monthly payment that you make, it's not to a landlord, it's to the bank, but you're building equity every single, monthly payment that you make. And over time, you're basically, increasing your wealth, by owning more and more of that bit of the building, of the real estate that you're operating from. And in fact, quite a lot of businesses, the owner may have owned it, for 30, 40 years. They decide to retire, they shut down the business, or they sell the business. The actual sale of the business, is not, may not be significant, but where a lot of owners make a significant amount of money is in their land. They've operated out of this business for 30 years, and they've built up, they completely own the business, the building outright. And when they, retire or sell the business, they also sell the building, and that's where they make their money. So it's a great opportunity to, build wealth. And finally, it makes sense when a loan is reasonably affordable and you can likely repay. If you're not sure, you're nervous, not confident that you can make the loan payments, maybe it's not a great idea to get a loan, or maybe you need to get something smaller or make other plans so that you have that confidence that you can repay the loan. When it doesn't make sense, and I've seen this many times, is, basically to make up for losses or insufficient profits. I used to do lending, and, businesses come to me and just say, I've been doing this for a few years, and, I'm not making ends meet. I can't pay all my bills, so I just need a loan. And that's dangerous, because profits are what repay the loan. And if your business is already struggling to make a profit, and then you get a loan to cover some of those expenses, those losses, there's going to be not much cash. There's going to be less cash. You could be digging yourself in a deeper hole with a loan, because now you have more obligations over time, to make monthly payments on the loan, or to service the loan. So if you're in a situation where you're contemplating a loan because you're not making sufficient profits, or you have a loss, first, it's going to be difficult for you to get a loan. It may be easy for you to get one of those quick, 48-hour hard money loans, but they're going to be expensive. And so that's not a good reason to get a loan. It doesn't make sense when you're getting a loan when it doesn't make a fundamental improvement to the business. Again, when your cash flow just might be tight or whatever, it may not make sense. I would just kind of really look and scrutinize, why you're making a loan, and give that some strong thought. When it doesn't make sense is also when it's expensive, or has onerous repayment plans, or that you don't have a plan to repay. Those are conditions. It's just dangerous. If it's very expensive, if they take money out every business day, if you're not sure how you're going to make it, that's just high risk. That's dangerous. I would highly encourage you to do a little bit of more math to get a better sense of that. When it gets tricky, as in life, life is not black and white. There's always this gray area, and many businesses operate in this gray area. And I've heard many businesses say, it's just going to provide some bridge funding until things get better, just around the corner. The next big opportunity is going to happen. The weather's going to get nicer and things will be better. And that may be true. But if this has been happening for a while, and you've not made significant changes to the business, that's a little risky. You could say maybe that's going to happen, but maybe it won't happen. And then what? So, if you're in this gray area, waiting until things would get better, I would recommend you only do this if you're willing to also make a fundamental change to your business to essentially guarantee that things will be better and that you can repay the loans. So if costs are a little high, and that's why you need a cash, or there's some seasonality, to your business, and you're hoping that things will get better next quarter. Don't just get the money and just hope and cross your fingers that things will get better. Make some fundamental changes to your business, and this could be difficult to do. This could require you to lower costs. This could require you to get out of your comfort zone and do things in your business to make a fundamental change in business to require you to allow you to make those loan payments and ultimately repay the loan. So, if you're thinking about when things get better, really also look at what can you do to increase the odds of when things will get better. Another area that gets a little tricky sometimes is when you're refinancing and consolidating debt. Maybe you have a little credit card bill here, maybe you have a loan, equipment loan there, or maybe a small business loan there. Before you know it, you have 6 different loans, different interest rates, some of it expensive, some of it not. It's a pain to manage. There are opportunities, and this is 2024, so interest rates right now are a little bit high. So refinancing is not that popular right now, but maybe one day interest rates will get lower. There may be an opportunity to refinance your debt, consolidate all that debt by getting a loan. You get one big loan that covers your credit card, that covers that equipment loan, that covers that business loan, maybe at a cheaper rate. Interest rates in a few years might be cheaper, so you save on interest expense. It's just easier to manage because instead of having 5 or 6 different loan payments, you now have one loan payment. You can also spread out the payments a little bit, over time, and therefore make the monthly payments a little bit smaller, thereby freeing up a little, cash flow. That's certainly an option. Many businesses have done that, but understand that when you're spreading out loan payments over a longer period, you're going to be paying more interest on that loan. So yes, it will help cash flow, but it's going to be over the long term more expensive for your business. So there are many scenarios where refinancing and consolidating debt makes sense, but do your homework, make sure the math works out for you, and don't refinance just to kick the problem down the road. Again, understand why you're in this situation where you have all these loans, the bills are getting expensive, they're getting unwieldy, and what can you do to prevent that from happening again? So if you're going to consolidate the loan, again, make changes to your business so that this is not going to happen again. So that's the quick overview of good loans and bad loans. And I encourage you to stay tuned for the next video where we will talk about what it takes to get a business loan.